Significant changes are sweeping across the world, and these shifts are not just political, they're economic. The return of Donald Trump to the White House is not the cause of these changes, but his policies are accelerating them at breakneck speed. And at the heart of this global transformation lies one powerful trend: de-dollarization. De-dollarization means countries around the world are moving away from the US dollar as the global reserve currency. This isn't new. It's a process that began decades ago. But under Trump's second term, the cracks in dollar dominance are widening faster than ever. In the first 6 months of Trump's second presidency, the US dollar suffered its steepest fall since 1973, losing more than 10% against a basket of major currencies. Investors are dumping US assets, rattled by Trump's massive tariff threats and escalating economic confrontations. A senior Deutsche Bank analyst even warned, "We are witnessing a simultaneous collapse in US assets. The market has lost faith." Even mainstream economists are sounding alarm bells. Barry Eichengreen, one of America's most respected voices on the dollar system, long dismissed predictions of a collapse. But in a Bloomberg interview this year, he admitted, Trump's chaos has increased the chances of a sudden dollar rout. That means a rapid loss of confidence, triggering financial instability worldwide. And Eichengreen is not alone. Harvard's Kenneth Rogoff has also warned, we are absolutely at the biggest inflection point in the global currency system since the Nixon shock of 1971. In other words, we may be witnessing the beginning of the end of US dollar dominance. So what's driving this global shift? The reasons are many. The weaponization of sanctions, Trump's tariff wars with allies and rivals alike, political interference in the Federal Reserve, and fears of persistent inflation. Around the world, central banks are piling up gold, seeking safety outside the dollar system. And leading the charge are the BRICS nations: China, Russia, India, Brazil, and their growing circle of partners. Together, they represent nearly half of global GDP and the majority of the world's population. For decades, defenders of the dollar claimed there was no alternative, that the US financial system was too big, too deep, too powerful to be replaced, but the data tells a different story. In the year 2000, nearly 70% of global reserves were held in dollars. Today, it's under 58% and falling every year. Meanwhile, gold reserves among central banks are at record highs, with BRICS countries leading the surge. And now whispers from Washington about a so-called Mar-a-Lago Accord are fueling even more uncertainty. Trump's top economic advisors are reportedly considering forcing allies into unfair financial agreements, demanding they accept century bonds and absorb the cost of a weaker dollar. The idea has drawn comparisons to the 1985 Plaza Accord, a deal that devastated Japan's economy for decades. But this time, major powers like China will not play along. The US dollar once symbolized stability, strength, and global trust. But today, under the weight of tariffs, sanctions, inflation, and political turmoil, its dominance is slipping. Economists who once defended the dollar system are now warning of its decline. And as BRICS nations and global investors seek alternatives, the world is entering uncharted territory, a new multipolar financial order. De-dollarization is no longer a theory, it's a reality, accelerated by Donald Trump's policies. And what happens next could redefine the global economy for generations.